And welcome to Market Cafe with me, Ankur Mishra and Kanishka Sarkar. A lot of action has happened overnight. Let's get started with US market check first. Good morning, Kanishka. How were US markets yesterday?
Good morning, Ankur. Well, the sentiment on Wall Street was driven by the signals that came from the Fed. And the Dow Jones Industrial Average that ended modestly lower following the Federal Reserve's latest policy update, where the central bank has kept interest rates steady, and Chair Jerome Powell has signaled it would wait to see the impact of Donald Trump's tariffs on inflation before proceeding on rates. Now, the 30-stock Dow that lost about 0.1%. Now, the S&P 500 that slipped about 0.03%, and the Nasdaq Composite, however, we saw a mixed move on Wall Street. The Nasdaq that inched up higher, that is not very high though, marginally higher by 0.13%. Now, remember, the Fed has left its key rates unchanged in a range of 4.25% to 4.5% as the markets were expecting. Nevertheless, it turned out to be a mixed bag of news for investors, as the central bank still has signaled 2 rate cuts this year, while simultaneously hinting at stagflationary threat. And the policymakers lower the 2025 forecast for economic growth to just 1.4% and raise the core inflation outlook to 3.1%. Now, apart from the Fed reaction, US stocks have been downbeat this week. Now, on the back of the conflict that's been happening in Israel and Iran, which has also raised oil prices, Ankur.
Yes, oil prices are a little volatile with a positive bias, and they are waiting a signal from US President what will be the US action on Iran. So Brent crude was hovering around $76, and if you talk about WTI, that was around $75. If you see the whole week, $8 was the range where crude is hanging on.
Right. Before heading with more news, let's take a look at all the events that are the cues that we'll be watching out for later in the day. Back home, we have the weekly Nifty expiry today. That's something to watch out for. In the US, it's going to be the Juneteenth federal holiday. In the UK, retail sales data is something that we'll be watching out for. Now, in terms of corporate action back home, Aegis Logistics and AJ Wopak, their Q4 earnings is due today. It's something to watch out for. Thirumalai Chemicals board is expected to mull a fundraising. Apart from that, it's also the last day to buy shares to be eligible for a dividend when it comes to Bajaj Auto, Bank of India, HDFC Life, PNB and Tata Power.
Let's get started with the big news which has been tracked globally. US Federal Reserve is holding interest rates steady, which came as no surprise. The benchmark following rate remains unchanged at 4.25 to 4.5%, where it's been since December 18. But the real action lies in the Fed's outlook. Despite elevated inflation and signs of slowing economic growth, the central bank still sees 2 rate cuts happening later this year. And this is as per its updated dot plot, a closely watched projection tool. However, long-term expectations are cooling. The Fed trimmed back expected cuts for 2026 and 2027, signaling a fewer of total reductions ahead. While talking on GDP front, the GDP growth for 2025 is now seen at just 1.4%, while inflation ticks up to 3%. Remember, in the last projection, GDP was kept at 1.6% and inflation at 2.8%. The unemployment forecast nudged higher to hitting 4.5%. All these points to a stagflation-like scenario, tepid growth, sticky inflation. Still, the Fed's decision was unanimous, even as internal division grows on whether to cut at all this year. Let's go across and listen to that excerpt what Mr. Powell had to say.
Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. Increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
All right, that's the key commentary coming from Fed Chair Jerome Powell. But moving on, Donald Trump made a flurry of headlines in a rapid-fire press interaction overnight with a major focus on Iran, Israel and the Fed. Now, on Iran, he hinted at issuing an ultimatum, confirmed that Iran had reached out and even suggested talks at the White House. Now, he has claimed Iran is now totally defenseless and that Vladimir Putin has offered to mediate. Now, Trump reiterated his stance that Iran must never get a nuclear weapon. While avoiding a clear commitment on military strikes, he teased that the next week will be very big. Now, on Israel, he has said that he spoke with Netanyahu every day, but denied that offering additional US aid, saying that instead of that, he has told him to keep going. Meanwhile, Trump reignited his feud with the Fed, demanding rate cuts of 2.5 percentage points, citing European Central Bank as a precedent and saying wait until Powell gets out and then go long term. Let's go across and listen into that excerpt.
I have a plan for everything, but we'll see what happens. Got a ways to go. They should have made the deal. I had a great deal for them. They should have made that deal. 60 days we talked about it, and in the end, they decided not to do it, and now they wish they did it. And they want to meet, but it's a little late to meet, but they want to meet, and they want to come to the White House. They'll even come to the White House. So we'll see. I may do that, but it's a shame it could have been done the easy way. I have ideas as to what to do, but I haven't made a final. I like to make the final decision 1 second before it's due, because things change. I mean, especially with war, things change with war. It can go from one extreme to the other. War is very bad. There was no reason for this to be a war. There was no reason for Russia, Ukraine. A lot of wars there was no reason for.
We also caught up with the Lev Aran, Israeli columnist, and Madhav Nalapat, Vice Chairman, Manipal Advanced Research Group, to decode the Iran-Israel conflict and where it is heading. Will there be a war or not?
I don't see how Ayatollah Khamenei can sugarcoat it. He lost the war. He cannot control his own air. You see Israeli jets all over. Also, the defection inside the Iranian army. Also, the low mood in Tehran and Isfahan and other cities. So even the fact that Ayatollah Khamenei is still alive, while 2 chief of staffs are already dead and also many others, it is in a way a litmus test of the situation right now in Iran.
Now you know exactly why Israel and the United States are joined on the quickest way of ensuring the end of the Iran nuclear capacity, period. And secondly, why, frankly, Israel and the United States regard clerical Iran as a mortal threat in the region to all the other countries surrounding Iran. The comments illustrate that absolutely perfectly. And in my view, the Americans will not stop one way or the other. Israelis will not stop until the nuclear capacity is completely degraded to zero and there's a change in the clerical regime.
All right, then moving on, amid all this flip-flop and the rhetoric over the West Asian conflict, Donald Trump is facing backlash from his own MAGA base over the prospect of a U.S. military strike on Iran. Now, key allies like Steve Bannon, they warn against repeating past West Asian wars, urging Trump not to abandon his America First playbook. Now, while Trump insists his supporters love him, divisions are widening, especially as the president weighs backing Israel's military campaign. Now, critics within his base fear that entanglement abroad could derail his diplomatic efforts and legacy as a non-interventionist leader.
And moving on, European diplomacy is kicking into high gear. Germany, France and Britain will hold nuclear talks with Iran this Friday, and that will happen in Geneva, seeking firm guarantees that Tehran's nuclear program remains purely civilian. The talks are coordinated with the United States come amid surging tensions following Israel strikes on Iran and retaliatory missile attacks which has been done by Iran as well. European ministers will first meet EU foreign policy chief before sitting down with Iran's foreign minister, according to reports.
That's right. Now moving on and shifting focus to India-UK trade talks. Now the relationship between Indian and UK businesses is strong and growing, with both countries seeing significant investment and trade opportunities. Now, Indian companies are increasingly investing in the UK, while UK businesses, they are also eyeing India for growth, particularly in professional services and other sectors. Now, Commerce Minister Piyush Goyal discusses the Indian-UK free trade agreement with the UK Secretary of State for Business and Trade, Jonathan Reynolds, during the IGF event in London. Let's listen in to what the two had discussed.
The process in UK is slightly longer. India gets the trade deals approved much faster. So I do assume that in the next few months we may not be able to enter into force the agreement until the UK processes are complete. So I think a trade deal can only fructify, can only benefit both economies when the businesses of both sides start engaging with each other. I think very good discussions are going on. There's nothing which I would call a sticking point. I think there's negotiation on both sides to try and get the best bilateral investment treaty which works for both countries. I would like to commend Chancellor Reeves and Finance Minister Nirmala Sitharamanji and their teams who are both engaged in finalizing it. And I'm very confident and an optimist who believes that it will happen soon.
In the Labour manifesto, the priorities were India, written into the manifesto, and the GCC was the other one. It's slightly harder negotiating with the customs union, isn't it? But it's definitely a priority, and it's within there. And look, I think it's also, there's a message there about, and I think both Piyush and I recognise this, the world is looking for people to try and find a way through some of these issues. We all know it's challenging. No point in us saying, oh, it's a challenge. We know it's challenging. People are saying, can people work together? We want to see politicians work together to try and find a way through that. And I think our deal is a great bilateral deal for us both, reciprocal benefits, but I think it has also been a statement to the world. I have to say, very proud of that.
And back home, Air India is cutting back international wide-body services by 15% amid heightened safety inspections on its Boeing 777 fleet. The cuts, effective till at least July, follows a DGCA mandate for enhanced checks across its Boeing 787, 8 out of 9 aircraft. So far, 26 of 33 aircrafts have been cleared for service. The airline also have been hit by 83 cancellations in the past 6 days due to geopolitical tensions in the West Asia, and inspections on remaining aircraft are expected to finish very soon.
All right, then moving on, we'll keep it with the Air India tragedy then. The 12th June, that's exactly a week back, the world saw devastating visuals of despair and helplessness as London-bound Air India flight 171 crashed just minutes after taking off from the Ahmedabad airport. Over 270 people were killed and families left seeking answers. In his first interview since the tragedy, Air India chairman N. Chandrasekaran opened up about the incident, addressing questions on accountability, safety failures, and what the airline plans to do to regain public trust. In this exclusive conversation, Air India chairman said that the airline company is looking to set up a trust for the families of the AI 171 victims. Let's listen into this conversation with Times Network's Navika Kumar.
Whatever you may say, it cannot be sufficient enough to console them from this loss. So all I can say is that I grieve with them as much as they do. And when I say this, I mean it for me and all my Tata colleagues. We just want to consider them as part of the Tata family for life.
But there is no life.
It is.
they have gone.
But the families that they live today, we just have to be with them. All we can promise is we will be with them and I will be with them. But it's very, very hard to console because you can't get the life back.
How would you be with them?
Helping them in every which way, now and in the future.
Those two young girls, 8-year-old and 12-year-old, what are they going to do without their parents, and how will the Tata Group be with them?
So there are structures we want to put in place. One of the things that we have been thinking is to create a, say, for example, a AA171 trust, and then which will be available to them to look after. But there are many things, it's only not the financial need. There may be other needs. So you've got to think through and then create the trust and other functioning infrastructure so that we can be with these families. Some will not need any help, some will need some kind of a help, some will need emotional help. We don't know. We have to find this out. But the point is, it could happen to any one of us. It is very, very hard to explain what these people will be going through, and it's very hard for us to console. Particular aircraft, AA171, that particular tail, has a clean history.
Has a clean
history. And the two engines, both engines, the right engine was a new engine put in March 2025. The left engine was last serviced in 2023 and due next maintenance check in 2025 December. And both the engine histories are clean. When I saw that, I couldn't find anything with the team. Both the pilots are exceptional pilots. And the captain, Sabarwal, has more than 11,500 hours of flying experience. And the first officer, Clive, has more than 3,400 hours of flying experience. What I hear from our colleagues is they were excellent pilots and great professionals.
Stuff that often crop up.
See, as I said, the numbers that you have said comprises multiple groupings. Some are very grounding of planes because we had to go through the DGCA type checks. Then a certain number had to go through or cancel primarily because of this airspace closure and diversions and disruptions due to that and the knock-on effect. Then there is a third category. So since we have not explained all of this, so every cancellation has been reported in the media. And I don't blame the media. I totally hold Air India and our team to account that we have to do a better job of communication. Since that was not done, everything is reported as a technical snag. But none of these technical snags are of the nature that the aircraft cannot fly. It is some part missing, something missing so far. And this is not to say that something else I will not see in the future. So at this point in time, this is the status.
There is a, Tata.
So we have to give a very strong communication on a daily basis, at least for the time being, till such time the confidence is restored.
But Mr. Chandrasekharan, I want to ask you, you're talking about communication to the media. I'm talking about real communication to the customers waiting at airports. The communication link there is probably the weakest ever at this point in time, which is why you have frayed tempers, you have agitated families, you have people, expecting family coming from different locations internationally. And for most people, India doesn't begin when they land in India. India begins when they get into an Air India flight that is got a destination in India. What happens to that brand name, that complete faith in the brand Air India?
See, I can say that in each one of these areas, whether it is communication at the gate or communication at the counters or every aspect, there has been a vast improvement, but it is not where it should be. Still, there is a lot of gap. So we are on a transformation journey. We have done about 3 years. And in these 3 years, we have had to work on every dimension, whether it is in the fleet dimension, whether it is in engineering, whether it is maintenance, whether it is safety, whether it is customer service, technology. We have made progress in all dimensions, but nowhere we should be, we are where we should be. And we know we can get there, but it is taking time.
So that was N. Chandra detailing what happened aftermath of Air India tragedy. With this, it's time to take a quick break, but don't go away. News and updates will follow on the other side.
As you know, the existing regulation exempt the requirement of minimum holding period of 1 year only for the equity shares acquired pursuant to an approved scheme to be eligible for offer for sale in public issue. So, but if there is an equity share which is coming out of the convertible securities, then this is not available today. So this has resulted in certain investors not being able to participate in the offer for sale in public issue. So this is being extended. This benefit is being extended, and this will assist the companies which are going for reverse flipping. Certain regulatory requirements for all existing and prospective FPIs that exclusively invest in GSEX, and we will refer to them as GS FPI, will actually face less regulatory requirements. As you know, that several global index providers have announced inclusion in GSEX in their respective bond indices. And FPI investment in FAR eligible securities has seen a significant increase and has crossed 3 lakh crore mark in March 2025. So certain regulatory requirements specified for FPIs under the FPI regulations and circulars issued there are applicable to FPI investment into equity and corporate bonds and not relevant for investment in GSEX. In this context, the below mentioned relaxations are expected to give a fillip to FPI's investment in government securities.
All right, that's the latest on SEBI's norms. But moving on the latest edition of ET Now on the go, we caught up with Ravi Vishwanathan, the MD of TVS Supply Chain. He discussed with us the company's growth trajectory going forward and also shed light on where he envisions it to be in the next 5 years. Let's take a look at a short excerpt.
The vision is to be amongst the top 50 global supply chain companies, and what that means is a combination of things. One is, of course, the quality of customers, and I think we are well on the road to get more and more marquee customers, both from an existing customer base, like I said, 91 Fortune 500 customers, and looking at the pipeline, we have a very strong quality of pipe, which is going to give us the quality of customers. Second is the use of technology. We have always led with technology. Our solutions embed technology which is grown in-house, and that gives the flexibility for the customers to work with us, and that's one of the reasons why we win in the market. And the third, of course, like I said, we are a global company, global footprint, and those are the things which will converge into taking us to the top 50 global supply chain companies by the end of this decade, and that's really what we look at. From an overall revenue perspective, I think the aspiration is to be, right now we are about just over $1 billion in terms of revenue, 1.1 billion. We hope to get to $2 billion of revenue over the next 5 years.
Moving on, Vedanta will be in focus on the back of annual report. The mining company has laid out its strategic priorities for years ahead along with its capex plan. Ashesha is joining in with all the details. Over to you, Ashesha.
Well, yes, Vedanta will be in focus on the back of some important commentary that has come in the annual report from Anil Agarwal, and he has stated some priorities for the coming few years. One, of course, is with respect to completion of his capex plans across his business verticals. Second is about its deleveraging, especially not only for Vedanta Limited but for Vedanta Resources, which is the parent company. And as a consequence of reduction in debt, interest cost is also expected to come down. So this is also one of the strategic priorities for the company. They also say that a successful completion of the demerger scheme over the next few quarters is one of the strategic priorities for the company. Now, as far as their capex plans are concerned, Anil Agarwal clearly said that they incurred a capex of about $1.5 billion in FY25, and they are planning to incur capex of about $1.5 to $1.7 billion in FY26 as well. Now, as I mentioned, this will be across business verticals. One, they are expanding aluminium production to about 3.1 MTPA. So this will be one strategic focus area. And apart from that, they are also exploring addition of 250 KTPA zinc capacity for Hindustan Zinc, which is Vedanta's subsidiary. So expansion in aluminium and zinc are some of their key focus areas and capacity expansion plans going forward. Now, as far as their deleveraging plan is concerned, remember Vedanta Resources has been deleveraging for the last several years. They reduced their debt by about $0.7 billion in FY25 and a total of $4 billion over the last 4 years, and the management has clearly said that their focus on deleveraging is likely to continue going forward as well. Lastly, on demerger, they said that it will unlock value for its shareholders. It will position each entity for long-term success. So demerger is something which is a big catalyst for the stock. It is likely to play out over the next few years. So yes, of course, some important commentary that has come in with respect to capacity addition, with respect to deleveraging, and with respect to demerger, because of which the stock will be in focus today.
All right, those are the latest key takeaways from the Vedanta report. But with that, it's time to take a very short break on this edition of Market Cafe. We'll be right back with more on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to
their relevance. The focus will be on the India strategy to get more and more own label brands and nurturing scalable newer brands in the next 5 years is what the company is highlighting, and that will be their focus area. The other stock to watch out for is Vodafone Idea, as well as AST Space Mobile announces a partnership for satellite connectivity. This collaboration will bring direct-to-device satellite broadband connectivity to India. Hero MotoCorp will also be in focus today as the company will introduce Vida VX2 with battery as a service model. They will be offering affordable electric mobility starting 1st of July. And lastly, watch out for Zydus Life as well, because US FDA conducted an inspection in their Ahmedabad facility where they were issued 2 observations on that front. So these are the stocks to watch out for. Back to you.
Thanks, Rishti, for all those details. With this, we are completely out of time in this edition of Market Cafe. Thanks for watching.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.